What is going on, everybody? Welcome on into today's Power Hour live stream. It's a little bit early. I'm actually popping on here at 1:33 p.m. Central Time for an hour and a half. Just had a half a donut, and I am freaking ready to go. We're looking right now at a current trade that I'm in that is, it's honestly like I already had a green day and small at that, but I put this on. It's a pretty minimal risk. Trade on Unity, which I'll pull up the charts and explain why I like it in a second. But essentially, she's just grinding up. Stop loss is now this 9 moving average on the 15-minute chart, just because that's been what it's holding and respecting all day, essentially all afternoon, and there's no reason to sell it. So it's nothing. I got in as it popped up over 42, and just going to ride it until either that moving average breaks, which will pretty much stop me out at a slight gain at this point, or before the end of the day here, if we get a push up over 43, which we're close. So I'm looking for that pop or the stop. That's it, pop or stop. Here's the risk reward trade. Above this line was a breakout trade. Yeah, it was a breakout trade, but some of the stuff's been working nice, and this had the setup that I like to see for a continuation breakout, and it's been nice with the tight stop. And when you get these types of moves, they can be nice outlier moves. And I also played March contracts, so really minimal. Honestly, it's not even something to talk too much about. But the overall idea or thesis behind it is this is even swing worthy in my opinion. Look at this chart. Unity rejected this 42.25, back here in September. Double top back in December. We're busting it. We're busting through, and this thing looks juicy. Now, of course, earnings will be next week. So, I'm not going to hold to earnings, but I'm saying, like, in terms of the next couple of days, like, this could get a pop, especially if the market's decent, and this could pop through. Not to mention, we've got a risk on day right now. So we're seeing a lot of risk on stocks ripping. Just to the top of me is our risk on list that I've been following, that I have got like my risk on watch list names. I mean, they're all green. They're all freaking green. So it's just green across the board. You go across to the large caps, and there's some mix, but the risk on names, the small and mid caps, my goodness, green across the board. A lot of earnings. We got some good reactions off of earnings. Roblox, Upstart, Palantir yesterday, rippers, absolute rippers. So momentum is there, man. The momentum is certainly there, at least to the upside in the small to mids. That is for sure. What's going on? Flippo had some fun scalping, some shop on SPY. A little better at scalping, $2. And you know what? SPY today hasn't moved much, right? But it's you've had nice. Actually, no. I guess now it's making a push, but from the really small candle. But this chart looks good. I mean, this chart looks bullish. Tomorrow we have got jobs numbers, but this chart looks really good. I mean, straight up, it looks good. So until it gets broken, why fight against it? But yeah, I mean, this morning came down and held that 410 area pretty much, dipped just below by a couple cents, 50 cents max, held that a couple wicks, and then just kind of been grinding up. And now we just hit a high of the day, 10 or a little bit ago, like 20 minutes ago. So about a $3 range, $4 range, which is not a ton, but it's decent. I thought it was worse earlier. Now it's getting a little bit better. $2 in the money contracts, scalp them for 10, 20%. Yeah, that's solid. I've been trying to see, just trying to test. Well, obviously, always looking and keeping eyes open to what makes sense. And I kind of had this thing where I've done better with the in the monies, right? But at the same time, I think to myself, well, yes, I've done better with the monies. There is definitely worth, with a out of the money or at the money with time strategy definitely makes a lot of sense, because your potential reward in your direction can be so much greater than your risk if obviously managed properly and done with a decent win rate. It doesn't have to be amazing, but a decent win rate. And, it could be the risk reward makes a lot of sense. I just think that the problem, I've had in the past with that type of stuff is playing, too close to expiration or playing too far out the money, But here's SPY's 5-minute. It's kind of putting in maybe a flag on the 5-minute here. If I bust up over 413. Actually, you know what? Yeah. If it gets over this level right here, it's pretty much the highs of yesterday. I'll put this line right here on the chart at around 413.50. If it gets above that level, that's pretty much where we closed up at the highs yesterday. A couple wicks over, but over that level could give us some continuation, squeeze out into the close, and SPY might actually be looking like it wants to do it. If you look at different time frames as the day goes on, I've been finding that like the 30-minute chart, these time frames tend to be pretty nice. So you're kind of seeing the setup right here on SPY. If we get up over that 413.50, it has the potential to pop. That's for sure. What do you think of SQQQ? I mean, here's the thing. Big picture, right? This is getting, let's look at the big picture on the daily chart on this thing. What you kind of have, if you ask me, on this chart is you kind of have a bear flag that's about to be breaking to the downside now. So you had these nice higher lows right here. You had these higher highs. You kind of had this nice flag consolidation after this big move down. And now you're breaking this. This looks like a short, if you ask me, which would mean a TQQQ long, or a QQQ long, etc. So, but when you play these leverage ETFs, like shorting puts on SQQQ, because of the decay factors as well, right? This could be nice, could offer nice downside. So that's what it looks like to me. But you are getting down to some of the lowest levels we've seen on this thing in the past, year or so, and it's used as a hedge. So what I'm looking at, what I think, to be honest, is market looks pretty strong. I'll look at QQQ. So let's look at the Qs. It's breaking this. I have this downtrend drawn in here. It's not a huge one, but it's breaking this little downtrend here on the daily chart, popping the upside. These charts look pretty good. It looks like we just essentially bull flagged after a big move up, consolidate, CPI digest, and now we're ready for the next leg. That's what it looks like, unless the news, or something happens, right? It just seems like price there's a magnet pulling it up. That's how it just feels, right? That's how things just feel right now. Whether you like it or not and think it should happen or not, doesn't really matter. Market doesn't care about our opinions, right? So that's my take on it. I think that this could offer, especially if we pop a new high on the year on the Qs and the S&P, if we get up into this area, this could offer, some nice opportunities to take profits, to lock some gains, to just reposition, or to add in some hedges, as maybe there'd be a pullback from, a pullback at some point. As we look at the fear and greed index, you look at things like sentiment, that's going to get up there. Right now, it's not terrible. It's pretty skewed onto the greed side, I believe. Oh no, it's actually almost extreme. But again, what is overbought could get even more overbought, same as the downside. So the thing is, if we get a pop through those highs, we'll get into extreme greed. The longer we stay into that, the higher the chance of a pullback, right? The higher the chance of a hedge working out. And the more important I think it would be to have a hedge to feel good about where you're at. You know what I mean? So that's currently my take, whether people like that or not, because I think that's just a bearish bias. Maybe that's skewed a lot of us, but SPY, same deal. I mean, this chart looks freaking beautiful. Like this looks like it's ready to go. It looks like it's ready to pop off. And today's Wednesday. I mean, the second half of this week could be nice. It could be strong. We'll see tomorrow morning. Let's see we got jobs numbers tomorrow morning. So jobless claims. Here's the deal. Unless this number comes in substantially above or below expectations, I don't think at the end of the day, it's going to be a humongous deal. Just kind of like the CPI, like we've been talking about how last year CPI was huge, right? Huge trades off CPI. And as we got to the end of last year, I was like, the CPI trades probably are gonna fizzle out here. And what have we been seeing? The CPI trades have fizzled out, where we haven't gotten huge moves off the CPI reaction, even though December's data that we got in January came in line. This data came in a little bit hot, and we actually just chopped around, and now we're going higher. It seems like. So I don't know if it's necessarily the volatile trade anymore, because it seems like we're just kind of doing our own thing at this point. Market's already kind of got its mind made up for now. So that's that. And then you got some producer price index numbers, some PPI as well. So 8:30 a.m. tomorrow is the time. And after 8:30 a.m. tomorrow, we should be kind of chilling. So that's the deal. But I thought I saw some Fed speakers coming in tomorrow. Let me just see if I refresh this page. Maybe not. Maybe they are. Let's see if I can find that thing. Yeah, I'm seeing that they're supposed to be some Fed members speaking tomorrow. Bullard at some point. I don't know. I think in the afternoon. So in the afternoon, maybe we'll pay attention to that, but we shall see. So SPY right now is looking like it wants to push through. If it breaks that 413.50, it could offer a nice little pump into the close. We'll see. We will see. $2 in the money. Some gamma that I can squeeze. Massive dump on SRZN at my stops with the rest. Didn't go in my plan. Let's see. SRZN. I mean, I think I sold that one last week. All of it. At least mine. I knew it looked like it could go. It could keep going. But yeah. Fair enough. Hey, but from the buys down here, still awesome trade, right? And at some point the stop's gonna hit. But either way, if you're trimming a little bit as it goes, a little on the way out, every 10 or every 25 cent level, roughly speaking, let's just say is maybe where you're putting some sells, or every 10 cents you're putting a little sell. You're still, you still locked some good gains. And even if it does have hit a trailing stop loss, nothing in the world. If it holds this 80 cent level, it could be this 80 cent level is like the spot. Inflection point right here, resistance here, so far holding it now. So that 80 cent level is going to be the spot to watch, but it's too volatile off of fairly low volume. Is it worth that? I'd leave it alone. But this is a setup I think that looks really good into the close. Obviously, only an hour and 15 minutes to go, but Unity, if you're talking about a potential even a swing idea, this one looks freaking juiced up. I wouldn't hold it through earnings. I would definitely not. But if this thing can stay over $42, it looks really good. So what's it just doing? It popped. Did it hit 43? It got close. Hit just shy of 43. Now it's pulling back by a touch. But I've been in this for like an hour and a half, I guess, or 2 hours. It's a 30-minute chart. So yeah, I've been in this since we got about that 42.25 and then looking for 43.25 in a perfect world. No guarantees we get that at this point. Stop loss. My trailing stop loss is now at like 42.50 or 42.60 here. So see what we get into the close, but maybe sneak a few bucks out of that one. One more I have is that jobs are so good. Retail sales were higher. Economy holding up. Well, that's the thing. I think that that's what we've seen also in yields, right? So with the market, the thing that's kind of funny is the market doesn't give a shit right now, and whether we like it or not, right? The market doesn't seem to care. Maybe there's a delayed reaction coming. Look at this. Look at the 10-year. 10-year, man, is just new high on the year. 10-year just hit a new high on the year. Or no, maybe not. No, not necessarily. It popped to 3.9 like right at like December 30th or whatever. So technically, I think it started the year off like it was up around the 3.0 rates, but now it's sitting here at 3.81. It's the highest it's been in, essentially a month and a half on the 10-year. And so the spot to watch next is got above this 3.8. So there you go. Now, if it can confirm above this 3.9. So this looks like the 10-year is trying to reverse here and get going the upside. Now, I think, to be honest, the 10-year, again, this is just going off the back, I think, of strong economy data and jobs data. I think that's what it is. This is going to present an opportunity at some point, like we've been talking about, because the bonds trade, the TOT trade, I think for, a nice time horizon, no rush into that trade necessarily. I mean, get a nice dividend. I mean, it's a decent idea. It really is, because we know the end is coming. The question is now, okay, how many more hikes and the exact number? But what we're kind of seeing is the market kind of doesn't care as much. It's not as sensitive as it used to be. And I think that has to do with maybe this thought or idea that we can get a soft landing. That's potentially the idea. That's what it kind of feels like. So right now, I think we're getting a surprise, and people are looking over at the 10-year saying, haha, market's going to dump. And you look over the market and you're like, oh, the market's actually holding up pretty nice. So something's got to give, or I guess maybe nothing is. And it's just going to be this correlation no longer valid, I guess. Also, DXY, the dollar, touched 104 today, and it's like right there. It's right there, though. It looks pretty strong as well. Had a nice move on the dollar. So let's see what happens here. If the dollar keeps getting, building some strength over that 104, or DXY does, that's going to be you would think it should put some pressure on the market, which is kind of why I think, to be honest, we've been kind of in this like this limbo of like kind of going up, but then like also not, like we're not dying, we're not dumping, but we're also not like having like a ton of continuation follow through moves. So we're kind of in this weird like limbo, I guess, period. Like not everything is lining up to say, go long, right? Obviously people are skeptical anyway, but also at the same time, the price action, the bias that you can base off of price action, the most important bias to have is based off price action, in my opinion, but that is also not trending down either. So it's like, what the heck's going on? So we're in this like limbo, it seems like. Check out the put call ratios. Haven't checked these in a while. Put call ratios have come down a lot. Trend of higher lows is kind of broke, I guess, almost with this little move down here. But hasn't gotten as high as it was back in late December, which was pretty nasty on the put call ratios. Short end phase 218. I ended up selling my end phase short yesterday, the hedge, because what I saw it did, and I ended up I could have sold it for a lot more if I obviously got the bottom. But it came down, it actually dipped down under 200. So the spot that I was watching was this zone from 200 down to like 195. It did barely get under $200. I didn't see it exactly when it happened, so I just looked at it in the afternoon and was like, I'm seeing some strength here. We technically hit the target zone that I wanted. The market just doesn't seem like it wants to die. Could be wrong, but I have a March expiration, so I'm just going to lock it in and just move on. Could reassess and maybe go back into it, but it's at a spot right now where this has been the zone to kind of watch on end phase, like right here. Because as it broke down, this was a really cool, or not cool, this has been your rejection zone. So over this like 220 on end phase would start to invalidate the short idea, the short thesis. So if we get above that, I would say the short idea is maybe invalidated by the technicals. But it doesn't look too bad, and it's had a decent day here, like a lot of stuff has today. But that wick kind of, I'll say scared me, but it's like, okay, it came into that zone and buyers quickly stepped in, so I'm just gonna move on. But this is a spot, this is the area if you're looking at it short. Obviously there hasn't been necessarily confirmation just yet, and to be honest with you, this looks bullish. Like if you're looking at like this chart on the 1 hour chart, like that's like looks a bull flag to me. End phase over this 218 can rip to 220 pretty quickly. So now, you're not dealing with massive, like, again, there is some resistance up here, 220-ish, even 221s like up here. So it maybe isn't the cleanest of trades, but this 1 hour chart, if you're just looking at like today only, like that looks pretty freaking bullish to me. You got these higher lows, resistance clearly established here. If that goes, like that could be a nice pop. It could have a rip right through. So I'll watch that one kind of close on any end phase. America's debt extremely high. It pays so much in interest and never. Well, the thing is that that's the bad scenario in terms of rates, right? But the thing with that is, you think back, you look at the Fed and say, well, the reality is that this is not going to be, it's not sustainable to keep rates, this high for however long they're saying they want to keep rates that high, right? It's not. It just isn't sustainable. So that's why I have a decent amount of confidence from a macro perspective in that TLT idea, just for that reason. Defaulting on some debt is, here's what I was thinking too. I haven't looked into this stuff too close in a bit, because I know there hasn't been too much talk on social media and wherever, just I guess media outlets. But they postponed those federal loans, right? Student loans, which I do have. I'm very close to paying down a private one, so that one's almost done, which is cool. Essentially paid that one off. I was like 30-ish K, 30-ish, I would say, when I graduated in 2020 May, and I had a 6 month period I didn't have to pay it. I don't know if I did. I don't think I did. And then I started paying it after that. Now, interest was accumulating the whole time while I was in school, and even that 6 month grace period. But 2023, probably May. It looks like about three years from graduation, I should have that one done, roughly speaking. I think technically I've been paying it for a little bit less than 3 years because that 6 month grace period from May of 2020. So whatever 6 months out of that was when I started. So I guess like the fall was when I technically started paying it. But yeah, I have federal ones as well, which have not been accruing interest and have been paused. So I'm just going to let them do their thing, obviously. And that's why I've been putting more money on the other ones to pay that off as fast as possible. But I haven't heard much talk about it. And I'm thinking to myself here, watch this scenario, right? Because they've pushed it so far out, right? What about a scenario like this where now all of a sudden the job markets, by the time the government and whatever, they can make their decisions and figure their shit out with this whole plan, whatever, if they got a plan, which it seems like they just can't figure it out, but whatever. What's the next complaint going to be? Well, everyone's going to start complaining, well, I don't have a job. Or, I have a lower paying job, because we're seeing people having to get those second and third lower paying jobs to pay the bills these days and people getting laid off from their higher paying jobs, right? So what about that scenario, right? Where you have that kind of going on, and I don't know what they're going to do and if that has any effect on, those payments. But again, right? Think about this. All the people who've had their loans paused for, however long it's been, rates have gone crazy high. I know my private loan, now I'm the idiot back at the time. I could have locked in a rate. Did I really have any idea what I was doing? No. But I had a variable rate. So for a large chunk of the time, rates were low, or not large, but from the beginning of when I started paying it, rates were pretty low. So it wasn't a big deal. It was like 4%, which isn't the best. But, for me and credit score, I guess at the time, that's the best I was able to get. It's now like 9.5%. 9.5%. Now, it's not that much money left on it, so it's not that bad. But holy shit, picture people coming out of school with $100K in debt, paying 9% interest. Like, that's just smothering debt. Like, smothering debt, and especially in a job market that now gets beaten down because the Fed's got to slow the economy down. In a job market that gets beaten down, and now maybe you don't have as easy access to those higher paying jobs and whatever, right? So just picture the stress that's going to put on the economy there, right? So you want to talk about more economic hardship and saying, hey, we don't have enough, the Fed's got to raise rates more. Well, once they unleash that's going to put a lot of hardship on a lot of people who have debt. So I have no idea. And again, the thing is that the longer it takes, right, the worse the economy is potentially. Maybe you get the soft landing. Maybe we do. I don't know. The worst things are going to be, if that's the case, if it's pretty bad, people are going to have their problem want to pay that. They're not going to want to pay that stuff either. So I can only imagine. There's just a lot of, looking back, when you think about things in the grand scheme and you just try to, enjoy the day to day, you're like, what does it matter? But there's a lot of interesting stuff coming up. Palantir, let's take a look at Palantir. Back over $10 a share, hit up to 10.23 today. Looks decent. We're getting some sell-offs now. SPY's pulling back. SPY just beautifully rejected that resistance. Let me just pull this up quick. $1 downside there on SPY. Here's a 5-minute on SPY. So double top at that resistance and then rejection, and here we go to the downside. So if you're a scalper, boom, there you go. You had a nice little opportunity there on SPY. We'll see if it bounces here because this is the prior resistance zone. See if that bounces there. But Palantir overall had earnings yesterday, I believe. If not, like 2 days ago in the after hours. But yeah, whatever. It had earnings like 2 days ago. And the thing was down around $7.50, and now it's at $10. Incredible move. Here's Palantir. They got a gap. Palantir's got a gap to fill all the way up here. So that's from 1042 or 1040 to 1090. So up towards like that $10.50 to $11 could be your next spot in terms of resistance. The thing is, probably needs a breather. Here. Like, I don't know. It's up a lot. Could it keep going? Yep. Volume is very, very high. If you jump in the way of this thing and you short it, that's fine, right? But make sure you have have your risk, mapped out so you don't get burnt on this thing, because last thing you want to do is get burnt on something like that. But that's kind of the look, and maybe there's a little bit of support on the way back down towards like $9. You have a bunch of highs, double top high there at like 9. We'll see if that area ends up holding on PLT. I'm going to see if, that's got to get taken out. Jeez. Let's see. That was a shame. That was looking good until then, and then the market just pulled back nice and heavily there. On you. Scam calls, man. So I was going to flush hard. Yeah, SPY looks like it. Well, it did just reject pretty nicely off. That was a dollar move down, which haven't had too many dollar moves, right? On SPY, it feels like. Scalper with puts 0 to 80, 0 DTE live. Back to that SPY. Yeah, she's giving us a nice pull. Yep, let's see how she finishes the day, but a decent, I guess, another sort of trend day, right? Not as clean as it was on Monday. Believe it or not, Monday was actually the best day of the week when no one thought it was going to be. But yeah, dip off the open, caught the dip bouncing up. I'm not surprised that I'm kind of surprised that we're seeing strength. But because the 10-year, just to be honest, the 10-year has been super strong, but she's doing what she wants to do at this point in time. The market doesn't seem to care about the 10-year and yields and whatever. So I see what you're saying. I don't think the Fed is stupid. That's like doomsday scenario. Won't send us. Yeah. Start default. Oh, yeah, I mean, the Fed is, I think, a lot smarter than people are giving them credit for, to be honest. Like, the Fed sees this data, the whole job. So the Fed's got this data in front of them. It's not like they're sitting here and they're like, oh, I don't know what I'm doing, and I'm just going to make some stupid decision because I'm Jerome Powell and I can do whatever I want. Like, no, he's not just, blindly. Like, the best stuff, the best is when you go on, like, Twitter or whatever, and you get people who are like, oh, Powell's a freaking dumbass and he has no idea what he's doing. From like some guy in his basement. Like, it's like, dude, like, I mean, I understand, like, you might not like the guy, you think he's, made some bad decisions, like, but like, in the time, and there's obviously politics involved, I'd imagine as well. Yeah, there's a lot more to the job than what some believe. And I believe Powell said he gets paid $190K, something like that. 170. It was like 170 or 190K a year. I believe is his salary. Which, I mean, that's nothing insane. That's a decent amount of money, right? Much more than the average American, right? But it's not like an insane amount. It's not like he's making $500K a year or $1 million a year, But I guess you could, maybe in the past, he had the ability to trade off of that or invest off of that information. Now the Fed can't trade individual stocks and they have to disclose it and all that stuff. But the thing that I was looking at earlier is, check this out. So going out, yeah, I got stopped. I just stopped myself out of that as we closed below that moving average, exponential moving average there on Unity. I got in at 620. I sold 625 on the contract, so I made $5 essentially, stopping out break even on that thing. But I had a nice little trade on a firm earlier today. But here we go. If you go out to, here's March, right? Here's the March estimations, and I'm covering up one of the things, but 12% chance that we get a 50 basis point hike and 87.8% chance that we get a 25 hike. So if you go out to March, then you go out to May, well, let's go out to July. The July 26th Fed meeting. Right now, the market's pricing in a 45% chance that we get 75 basis points worth of rate hikes by July, which that would be 4 meetings from now. So that's saying 3 hikes. If we were to go at 25, that's 3 hikes over the next 4 meetings. Some believe that we only get 2. Well, not some. The next highest probability is that we only get 2 hikes by then. And then there is a small, I guess, still a decent chance that we see 4 hikes by then, by this 13, this box right here. So I guess going out to June is more where we're at. Like going out to the June meeting, essentially we are pricing in 3 more hikes. So I think 3 more hikes from now is kind of like where we're at. I think the consensus is between 2 and 3. That's where we're at. These two columns. So, it's a matter of what the data shows. And I think the Fed's at a point, right, where they came from a 50 basis point, a 75 to a 50, back to a 25 now, that it's 25s. And the way that works is they can say that they're going to hike 17 more times or a ton more times. And then if they get good enough data, they can slow down and stop. It's not like they're kind of easing into that end of the hiking cycle. They've done a lot of the work to get us up to, 450 to 475 target rate right now. And now the last little piece isn't a big deal. How many more hikes you want to argue? Is it 2? Is it 3? I don't think it's a huge deal when they're all 25 basis point hikes. So that's kind of where we're at. Obviously, it could be more. I mean, I guess in theory, it could be more because if the data comes in super, super nasty or super, super hot, CPIs and whatever, and the Fed's like, hey, we kind of got to keep going. They could just keep going into July and September for all we know. Maybe it takes a little bit longer, but I think, we're kind of there. And so that's why I think that the bond trade is a very valid idea, because obviously, maybe not obviously, but I think it's pretty clear that as a country, with the debt situation that we've got and all that stuff, we physically cannot function with rates this high for very long. It just won't. It will lead to major, major problems. So again, now does that cause bigger problems? Stock market goes down, more downside, bad recession. Sure, like that's the argument there, right? But that aside, take the stock market out of it. Like if you want to simplify it down, look at bonds just by themselves, and look at yields, right? We know that the Fed, and even if you look at bigger names, I'm pretty sure Michael Burry, one of his tweets now, do you want to believe that guy? You give a shit about that guy? I don't care. But he's even tweeted about it. It's like the cycle is simple. The Fed will eventually cut rates, and then they will have inflation again, and then we'll have to raise rates. So it's like the same deal. So now we're getting towards that peak, whether it's 2 hikes, 3 hikes, 4 hikes, 1 hike, doesn't freaking matter. We're getting towards that peak this year. And at some point, something's either going to break, or we're just not going to be able to sustain rates this high, given the debt situation, circumstances in this country, that they will have to cut again, right? So you want to bet long bonds, or, you want to go out in time, you want to pick a TLT, something like that, that will give you exposure to a scenario where rates come down and this will go up. Okay, because as rates come down, as yields come down, bonds go up, so TLT, and you're going to get a 2.6% dividend in the process. So it's like, in my view, TLT, it's not as volatile as a tech stock, but if you can get maybe 10% upside in the stock plus a couple percent dividend over the course, of a year or two, that's a nice, pretty solid, 10, 15, 20% return. Maybe in an outlier scenario, this does better than maybe thought, and they cut rates harder, but in the course of a year, 2 or 3 years, something like that. Who knows how long? Doesn't really matter. No. That decision can be changed, and you can alter your position when the time is when it's necessary, and when, hey, we've got new data in front of us that signals that, hey, they actually won't cut rates as much as we thought. Okay, time to get out of TLT. Whatever. But something like that, clear your mind from the stock market and trying to guess where Tesla's going to go and SPY's going to go and this and that. This is probably a pretty laid back approach to putting your money in something that you're going to get some sort of yield on, and you're also going to be able to kind of play the economic cycle, and playing with the pressure that's going to be on, right? We know the pressure is going to be on. They're not going to be able to keep rates this high for forever. It's not going to be there. So, every red day, every red week, I think on TOT is an opportunity to average, and nothing insane. But I have some money in a TLT related position. So that's the idea that I have. That's not financial advice, and never do what you want to do, but that's from the macro perspective. I think it's a much cleaner approach than trying to guess where the market goes. Because again, in theory, right, if yields come down, right, we'd think, okay, well, that probably helps stocks. But there's also a scenario where like earnings are shit and the economy is hurt a lot more than we thought, and maybe stocks do a lot worse when rates go down. You know what I mean? So it's not going to work as clean, but this is a better, from a macro perspective, this is a cleaner approach, I think. So 190K, 190K is not enough for the amount of influence the guy has in the market. Yeah, you would think. I mean, I'm surprised he answered that question. It was on one of his interviews, like last week or a week or two ago. How's the volume on SPY compared to average? Let's see. This is TOT. What am I talking about? SPY. So yesterday was a high volume day. Today looks like relatively speaking, I guess it was up there towards a higher volume. Today is low. Today is a very low volume day. Look at that. I mean, we still got 50 minutes to go, and this looks like it's going to be lower than Monday. Believe it or not, today on SPY. But on average, like it's been, I guess yesterday was up there. We've been kind of doing fine. I guess overall on this move up, generally speaking, have been seeing sort of, sort of lower volume, a little bit lower highs on that volume on this move up, but not like terribly low that it's like, oh my gosh, this looks like it's BS. Like, I don't know. I think it's still fine. The chart looks decent. Let's look at SPX to get an SPX perspective. Yeah, SPX, again, same deal. I mean, today's volume is really low. Today is a pretty low volume day, believe it or not. So I wonder why. I wonder why today is a low volume day. CPI was yesterday, and maybe, people feel a little more comfortable. But even though, hey, low volume on SPY, but go and look at the risk on stocks. My goodness, they are getting ripped to the upside today. Look at a firm monster. It's up 15%. It was up more. Hit a firm this yesterday was at $13.16 or so. It hit a high of $15.21 today. Like what? Coinbase is up 15% as well. You got Roblox up 25 off the earnings. Looks pretty decent. Palantir's up about 10. Upstart's up 30%. They had earnings yesterday as well. 30% on Upstart. My goodness. Huh. A lot of people get salty at Powell because he didn't move their positions their way. Yeah. I mean, I feel bad. I honestly kind of do feel bad for the guy a little bit. Like, he's not. It's a tough job, and then he's got to do these interviews and these like meetings and answer these questions, and it's like, oh my god. I mean, I wouldn't want to be him, to be honest. I would not. ENVB still looks good. Holding on. Let's take a look. And also, when it comes to small caps, holding that 50 SMA, I mean, it's still not terrible. And the volume is low, right? Earnings, if that's an actual earnings report in March, something I guess pay attention to, but want to see it hold that 250 area, ideally. Was a firm a short squeeze today? Why is a firm up so much? No, they already had earnings. I think a firm and Upstart kind of play together a bit. So Upstart had a big day, so Affirm has a big day. They kind of trade in tandem. And also when you have a big risk on day, 15% it's a lot, but it's not like that crazy given the moves these stocks have made over the past couple months, in the past like couple years really. Because like when you broaden this chart out and you look at Affirm 15% today, like, oh, it's huge, right? But I mean, this thing could have a 15% day for like 5 days in a row and only be like, like trading like right here. Maybe even not even that high. Like, trading like here, $30, something like that. So, it's all relative, right? BTC ripping, crypto miners. I can take that in a second. SNDX. That trend has been solid. This daily chart looks pretty good. It's been a solid name, man. I mean, I holding that 50 SMA now, this is your risk, $25. Want to see it hold over 25, but this looks like it's pretty good. It had this big move up, and you kind of had some of this resistance right here that was trying to break through. We now are back testing that as support now, so it looks good. As long as 25 holds, it looks pretty solid for upside. That looks pretty strong, man. Pretty strong name. Crypto miners. I haven't checked on the crypto miners. Let's take a look at Mara. Oh yeah, nice bounce. Past couple days off the 50 SMA and Mara pretty much. 50 SMA right here. Bouncing on up. Still not back up to that 200. It's up to like 950 is like the next resistance on it. So I'll have to watch that. Riot, kind of same deal. It didn't get down towards that 50 completely, but it's like the same general idea on Riot. Wish, I saw Wish. Didn't it get a... I forget what Twitter account tweeted about them recently. Was it Muddy Waters Research? One of those guys that does a lot of short reports, but also does, you know, longs, I guess. They tweeted about that they liked Wish, essentially like right at the 50 SMA as well. So yeah, that's a common theme. We're getting those 50 SMA bounces as of late. So that's something to watch out for. If you're looking at a stock right now that's sitting on that 50 SMA, that could be a good spot to watch. 50 simple moving average on the daily. Let's see. That's a nice move. Let's look at the hourly chart. Yeah, they just ripped off the open. Just went straight up. So you'd think this is going to have some resistance up towards 1, but if it gets over 1, it could be interesting. Honestly, I don't think Powell gets paid enough. Yeah, I think it's the 190. I think is kind of low. I would have expected more. Great couple of days. Halfway to my profit target for the funded account. Sick. I might try one of those challenges out at some point, or one of those like a top step or whatever at some point. I think it'd be cool to document. Oh, there you go. I think it'd be cool to document a futures fund account. I think I might do it. I might do it. I've gotten, you know, some experience trading the futures now, and it could be a lot of fun to do. So potentially. And also, yeah, it would kind of be like a side thing. You can connect them up to you can connect and trade right on TradingView as well. So Citron. Okay, Citron was the one that put up the Wish tweets. Interesting. Crazy that thing went down. Remember Wish, you know, was getting pumped by all those pumpers on Twitter and stuff. You know, when it was like I don't know what it was like up here, like $10, and went from 7 or 8 to 15. Then it went to then it got crushed and just gone down since. Imagine that short. Holy shit. They sell counterfeit items. It's all crap items, yeah. But there was a bull case argument made for them. Let me see if I can find it. Yeah, here it is. Here it is. The bull case for a Wish. Citron says that they're reluctant to mention it until they saw the Super Bowl. They say that the business model seemed terminal, and then everything changed, apparently. They think it's the most asymmetrical opportunity in the market. Temu had Super Bowl ads, number one downloaded app on the Apple platform. Wish is the exact same business as Temu, yet trades at a negative 450 million enterprise market cap. I remember looking at the Wish market cap a couple months back and going I don't know. It seems like it's getting a little oversold. I wasn't looking deep into the fundamentals and stuff, but it seems like it's getting kind of low, right? But what do I know? $813 million in cash as of Q3, no debt, $280 million credit line. They have multiple years of liquidity available potentially. So they put a nice little argument out for them. The new management as well. So maybe there's something there, something bigger there. We'll see. I didn't pick what options contract to buy after you know. Well, first off, you don't know. You do not know what move you're going to play, what move it's going to make with certainty. But you can have, your if you want to call it an educated guess. So let's say you go to a firm, for example. I'll go to a firm because this is one I did today. I want to know what it plays from today. Technically, you had this little downtrend break, but I actually played a firm here on this flag on the 5. I guess if you look at the 15-minute chart, it's a little bit easier to see it, I think. Yeah, sort of. But essentially, so I look at also this is above the key level of this 1435, which was essentially getting up into the gap that we've got on a firm on the daily chart. But on a firm, right? So I look at this and I said to myself, okay, like, well, what do I think about this, right? Let's go to the charts. Let's go to Weeble's option chain. So I like to give myself time. That's just, again, me. But I like to give myself plenty of time. So in this scenario, it's a Wednesday. Once we get to Wednesday, I like to go an extra week of time just so that I feel safer. If I'm going to buy option contracts, I'd rather not play this Friday, even though they'll pay more if the move goes your way. If it doesn't go your way, you're going to get killed. They're going to decay faster. So I like to go further out. And what I like to do is look around where we're at. So let's say we're at 14, like we're at 14.40 right now at this time, right? When I was looking at it. So what's realistic, right? You can go out the money and buy a $15 call with an extra week of time. Fair enough. Or you can buy a $14 call. But what I'll do is I'll make sure the open interest is nice. So I'll go over here and check in the open interest category. And Affirm, not really a problem because it's got a good amount of open interest across all these contracts, really from the $12 strike all the way up to like the $18 strike and the $20 strike. So it's not a problem. But if you've got really low open interest, and that's all relative when it comes to what stock you're looking at. But for in this case, a firm with open interest here around the money, 5,000, 2,000, 2,000, 3,000. If I see a sub 100, I'm a little skeptical. Maybe I'm not going to look at that contract. Then what I'll do is I'll look at that and say to myself, okay, I'll pull up the chart for that contract. So for example, if I go to the Affirm contracts. Actually, I'm going to go out an extra week because I don't want to play this week. I'm going to go extra week. So on Wednesday, I usually fast forward to the next week. So next Friday. So I'll go out to the 24th. I'll select these contracts on Webull. I will not click on the last, the ask, or the bid, because if I do that, it opens the order entry. I don't want that. I want to pull up, I'll click on the percentage increase or any of these other columns to the left. It will now, I go to my chart feature, it now pulls the chart up for this contract, and I'll go to like the 5-minute chart and I'll see, okay, see the volume of the contracts, I'll see how they've traded, and I'll look back and I'll try to compare, the stock price to the option contract price. And if I can see a nice correlation, a nice consistent, at least chart price action, you got the midday, not much volume was traded midday, was consolidating, fair enough. But if I see, okay, the last higher low was, down around 69 cents. If I entered here at 70 cents or 75 cents, that means if I'm going to risk that higher low, I'm going to risk down to 69 cents. Okay, that's, 6 cents of downside, and my target upside will be this dollar amount on the stock, which if I look back, you could technically calculate it. You go down here and you find the delta at 0.5, meaning for every $1 move in the stock, that option is going to move 50 cents. So essentially, if the stock moves 2 cents, or let's go to this chart. Let's say the stock moves, 50 cents. So let's say my target is 50 cents. I'm going to look for 50 cents of upside in the stock and 25 cents of downside as my risk on the stock. Well, that puts me in a spot of like, okay, I'm going to be looking for, roughly speaking, making 25 cents a contract and risking, 12, 13 cents a contract, something like that. So I kind of back my way in. If that makes sense to me, the profile looks good. Then I'll take the trade on those contracts. And I just like to buy an extra week of time, generally speaking. If it's a day trade, it's one thing, I understand, but I don't swing these things overnight. Anything like this, if I'm gonna do that, which I barely ever do, it'll be like at least a month of time, just so I have plenty of time on it. Like I had an end phase hedge that was out to March 17th, and I bought that like a week or two ago. About a week ago. So, buy a month plus a time, and then this way, you're fine. You don't have to worry as much. You should get you a job on CNBC. I would definitely not want to. I would never want to do that. I would never want to do that. I feel like I got the past couple months, like even so, I don't even know what it has been. But I have a much less, I don't say it's not in a bad way. It's, I guess, almost a good way. By the way, NVOS is up 20% today. One of the small caps I got. Let's take a look. Yeah, nice little pump, really good volume there. I'll never forget continuation. But I sold some on the pop to 20 something, wherever it was, back up to like, whenever it popped a nice bit. I sold some into that, and then I essentially didn't really buy much more, so I didn't really get anything else. I'm leaving what I have. It's like a couple $100 in that thing. But I'm looking for like, really a pump to 25 cents, maybe more at some point. Just being kind of patient on it. Went with take profit trader. Okay. Short some micros here. Let's jump over and peek and look at that firm pull back there. Yeah, well, lower high, right? So you have this double top, and you got a lower high right here. Looks decent, especially if we can undercut that recent low this afternoon. If we can undercut that, it can get a nice little sell into the close on it. But yeah, when it comes down to like the whole, like, I feel like I've definitely gotten, not that anyone necessarily seems to, not that anyone has said much, or not that I don't think it really matters that much. But I used to be pretty like, I don't know I used to kind of hold back in terms of how I would at least talk about things and whatever, and kind of be very, I don't know, YouTube friendly, I guess. Not that I think it really is a big deal, but I think it's fake, man. I mean, I'm not gonna be fake in how I'm seeing stuff and talking about stuff and whatever. It's like, not that it's fake, but it's just like, I'm gonna be honest. That's how it is. Call it like it is. How am I gonna act? How would I actually talk about something, or how would I see something? And I feel like if you go that route, same with like some of the big guys. Nothing against these guys, but like if you look at, and I don't watch too many of these guys anymore, but if you look at some of the guys, like the big YouTube guys, now they're very ad friendly, and so they don't, no cursing, none of that, generally speaking. Some of these guys in the finance community, and they're very like, they try to be very politically correct and whatever, or all that stuff. Only problem is that like, it just seems so fake. You know what I mean? Like how some of these guys talk, and how people talk on like, a CNBC, or how people talk on the news, like the inflections. I don't know. It's like, just like, I can't stand it. I really can't stand that. August popping in. Sorry guys, just tuning in and thoughts of this rally. Everything I know that we so far should not be rallying this moment. Yeah, I mean, the bond yields are like, hey, we're going up. But market's like, we don't really care. I mean, I was looking at the, let's look at SPY really quick. Honestly, like, you're like in a bull flag kind of setting up right now. If this gets going to the upside over like 415, I mean, this could be looking for 420 here soon. QQQ, if you want to call this a downtrend, it's not like insane, but like if you want to call that a downtrend, it's like trying to break that downtrend. It looked like things look good. IWM, same kind of deal. IWM just did this. Like it had this nice prior high test as support that we saw back in November, held that as support, and now it's bouncing. Like things like just from a big picture technical perspective look pretty good. So we might have more legs to this, whether we like it or not. First target 41.37. Head and shoulders until we break out a few more. How do you provide the most value? Transparency. Yeah. No, that's what it is. That's why I'll show you guys and be honest with everything. This week's been a tough week for me. Started out the week, had a contract that I literally could have thought I should have swore I sold it on Friday. Apparently I didn't. Woke up down 500. Was like, fuck yeah, great start to a Monday. Other stuff, I got some freaking, dude, I can't imagine the situation. I can't imagine like not having health insurance. I can't imagine that. I've had some appointments and doctor stuff. I had to get a freaking ultrasound. I still got an appointment tomorrow. Like I got some, like, not that it was a health scare or anything like that. I guess maybe it was. It's not like in full transparency. It was essentially, it's kind of gross. Essentially I found like a lump on the, on the lower region, right? And so I was like, it doesn't look good. I got my physical. I took that, blood work. Everything came out fine, blood work wise. Nothing was weird. But the physical, they're like, okay. She's like, hey, like, doctor's like, hey, like, go get an ultrasound. Like, let's just make sure this isn't like cancer or something like that. Get the ultrasound. It seems like it's okay. It's like a small, I guess, issue that I have a doctor appointment follow up. But it's like hundreds of dollars after insurance, hundreds of dollars getting shelled out. I'm like, holy shit, this sucks. I don't want to ever go to a doctor again. Like, and I'm not even and I'm not even going through like extensive treatments or anything. I'm just getting diagnosis on certain things that I'm just checking up on. But make sure, because I know I've had people that in my life, my family too, who haven't gone. If it's an insurance problem, that's one thing, but just try to keep up on it. And if you can't keep up on it, just try to do what you can to be healthy, as healthy as possible. I say I'm a pretty healthy individual in terms of like working out, eating decently, and all that stuff. But you still got scares here and there, and you got to make sure stuff gets taken care of. I also like Trader TV from Toronto. Deep in the money covered call on Tesla. Do I keep rolling them out? I actually have a similar situation, and I'm going to do that on Friday. My plan is to roll it on Friday. So I have a TSLL, which is the leverage Tesla, 1.5 leverage. I've got a 10 strike. That was one that I sold on this guy, and we're at 1362. So that's way in the money now. So we'll look at it. I'm going to look at it on Friday once like we fully get through this week and we get, premiums to kind of just trade at intrinsic value at that point on Friday. But I'm probably going to, I think you should be able to, what I would do is probably roll out week after week and just kind of inch your way back. Unless you're fine with it. The thing is that, if this market wants to go higher, Tesla probably goes a lot higher. So I'll pull up Tesla's chart. It probably goes higher. So, there could be some more meat on the bone. The thing is, at some point, right, it depends upon your outlook on it. Is it a long-term investment, right? And you got stuck on a covered call, right? That's one thing. To be honest, if you're a Tesla long-term investor, and you're looking to sell covered calls to make some cash flow off it, like you probably shouldn't have been doing that anyway. If anything, you would want to be selling puts into the flush, into the lows, go out like a month and sell a put, out the money put. You want to be selling the covered calls after we're extending up and as we're getting overbought potentially, or as we're having really big runs. Now, of course, this move is insane. It's not easy to get. You could have been sitting there saying, hey, Tesla, once it got to like, 165 or 175, I'll sell a 190 covered call out a week. Next thing you know, we're at 212. Like, oh shit. Right. But, geez, I'm going to roll mine. The only problem, you look back and at some point, if you are looking to take the profits at some point and walk away from the position, you just want to make sure you got to weigh the pros and cons of like, am I okay with the profits I'm taking here? Can I milk out a couple extra bucks? If I can, great, I'll do that. But do I want to still be long, deep into this year? It depends on how far I'm rolling out. Do I want to be there? If I want to be there, fine. But, if the market keeps ripping to the upside, I think that's when we want to be a little more, cautious and optimistic, sure, but be cautious about, about stuff. And hey, if you got some good gains and you're not feeling too comfortable and you want to lighten up or you're on margin, just lock it in and just, there's nothing wrong with locking it in. And just, tomorrow's another day and there's another opportunity somewhere out there. Things definitely look strong. Watch people on YouTube. Not watching people on YouTube anymore. Yeah. There's some good stuff. There is, but, to be honest, I watch on YouTube these days is like skiing videos. I snowboard, but I watch a lot of skiing. It's wintertime, so that's fair enough. Watch a lot of skiing videos. Apple, Microsoft following Tesla. Here's the 5 minute on Tesla. Yeah, she's strong. Dip below VWAP and just caught right back up. Apple's been pretty strong today, though. It's up 1%. Microsoft looked weak early and then regained this like 267.50. Regain that level. Guys are weird, man. I'll keep a cough for 3 years. One misplaced lump below the belt. I'm gonna see a specialist that day. Yeah. No, and honestly though, like looking deeper into that stuff, if you end up getting like I'm sure some people will have, horrible experiences as well with this too. But from what I have seen and from what I have looked up online, testicular cancer is actually not, it's not great if it gets to like spreads, but if you catch it fairly early, it's a very treatable cancer. What's your volume profile settings on Webull? Let's see. So I have row size of 30, value area of 100, and I have the point of control. Honestly, I don't even need to put that in there. I'm going to get rid of that. But that's just that red line that goes across the highest volume bar. I'm going to get rid of that because it's just like extra lines I don't need to have in my chart. That's it. Simple as that. I have the value area percentage and the column, the common column both set to white. That's all I use. So those are the settings. 30 row size, value area is 100. And that seems to be fine for what I use it for. The only thing that sucks about Webull is this, is you can't adjust how, at least as of now, how far they extend. Like I kind of want them to just kind of get smushed to the right a bit more, but you can't adjust how far they extend out on your screen, which kind of sucks. TradingView you can, I believe. So SPY back over 413 now. I agree. All the big YouTubers seem kind of fake. That's why I watch it. Appreciate it. I appreciate it. But, you know, that's how. And the other thing, too, though, is you think about this, and that's kind of how I feel. I'll mention it again, you know, probably this weekend video. Every Saturday I do portfolio updates. I pulled some money out. Number one, had some medical bills to be paying. Not that I necessarily need to pull money out to pay them, but also had that $500. When you make a stupid mistake, it's very easy to go on tilt and very easy to say, I got to make it back. So I know myself and done some stupid things in the past to say, okay, let's just pull some money out. Once we get back into a rhythm, we can add the money back in, or, you know, we'll just build the account from there and just kind of get into a rhythm. That's kind of the idea. So avoid the stupid mistakes, especially when you're in a drawdown, especially when things are not, you're kind of chopping up or you're not feeling great about things. You know, and in the past, I've been pretty dumb about that, and I've blown a lot more money than I needed to, you know, through periods like that. But yeah, and especially because the other thing too is that as you grow on the YouTube side of things, like from those people's perspective too, and you know, I guess I felt it, but I don't give a shit, honestly. This channel makes like a couple $100 a month in ad revenue, and it's like kind of cool, but it's nothing, like it's not paying the bills. It's not really doing much of that stuff. But when you're relying upon that for paying the bills, right, and you are seeing your trajectory, you want to grow. You don't want to stop growing. So you kind of have to keep pushing out and changing things up and doing whatever to appeal to the masses and do whatever and sell your shit because you got to pay the bills, whatever. And that's, you know, that's whatever it is, what it is. That's how they got to do it. But I don't like how it comes off eventually. And then at the same time in the trading space or the investing space, oh my gosh, God forbid you show a red position. Holy shit. I mean, whether it's honesty or not, like people don't want to do it. They don't want to admit defeat. They don't want to admit that they're wrong, that they aren't doing good, that this, because it won't sell their this or their that, right? Or their membership or their this. And so then it hits their income more. And so, you know, it's the fake accounts. It's like the BS paper. Like, you know, you get into all that type of stuff too. But geez, it's a lot of that shit going on when you realize they're not. I can imagine, I don't know what the actual numbers are. Everyone always says like, well, look at me, I'm showing you the results. And who knows who's actually being honest about that stuff too, because you can fake a lot of shit. But the reality is that I would imagine that more than half people on social media in general who've built followings or whatever because of their results are faking numbers. We're not showing you the full deal. In America, you either need a dual citizenship or really good health insurance. Yeah. Well, especially once you don't meet the deductible, right? Early in the year, that's a different story. So you're paying, you know, out of pocket for more than you want. What's up, Eddie? Been in Mara for 2 days now. Boom. That's been a nice trade, right? That's been a nice trade off the 50 SMA, right? Yes, it has. Holding that fives. It's getting up into this area here. I mean, I mean, the clear spot is 940 to 950. Like that's the true like next spot. It's got some, Bitcoin's got strength. Hey, this volume is looking good. Don't get me wrong. This volume looks good. So I like it up into here. Let's see if I go to like a 1 hour chart. Does that help? You're getting into a lot more, a lot more price action up in here. So yeah, the 850s makes sense. It's going to start finding some resistance, you would think. If it gets up over 9, man, look out. Look out. I only scaled into one contract. That's a make it or break it spot. Fell back below 41.40. Let me just check this out really quick. 41.45. Yeah, we kind of pushed right back up. Yeah, ES is going for potentially a high here. Yeah, 20 minutes ago. It could do it. All gaps usually fill. Yeah, I mean, the thing is that saying that is good and bad because, like, yes, they generally do. Now, not all, but most do. Like, I don't know, like 80% you want to classify it, something like that. The thing is, in time. So there's no guarantees that it fills the same day. No. Same day, not all gaps fill. And honestly, most gaps don't have to fill on the same day. But each day after that, as time goes on, the chances of a gap filling only increase, which would also make sense. But yeah. So Tesla filling the gap down. Let's take a look at that. Yeah, and maybe it does, right? Maybe it does. If you look back at Tesla's chart, it's got a massive gap right here, right? That's a ways to go. As of right now, no one can, maybe it doesn't seem like it's going to do that because it's pushing up, but it's possible that fills. Also, the thing is gap down or gap ups have a slightly lower percentage chance of filling than gap downs for the percent that do not get filled. And why is that the case? Just because of the nature of the markets, generally speaking, over the course of time, go higher, generally speaking. Not every stock, not all the time. There's bear markets. There could be years of chop, right? We may go into a 10-year span of chop for all we know now. But, when you get a gap down, a stock or market gaps down, there's a good chance at some point in the future, whether it's now, next week, next month, next year, next decade, that gap gets filled in, generally speaking. Trapping longs, trapping shorts. That's how the past couple of weeks have felt. And I think especially with the way the bond market's been moving, it's like, again, we've been trapping a lot of people on the long side, trapping on the short side, but we've also got these like conflicting arguments for should we go up or down. We don't have that like full follow through thrust. Picture if we did. If we did, we could rip if we did. So I don't know. That's why I'm not saying cautious, but like I'm open to the idea that this market wants to go higher than a lot of people expect, at least in the short term. Playing 800 profit today, taking Ethan micros. Yeah, I mean the micros are fun too, and they're nothing crazy. It depends if you're grabbing a couple of them. You can be swinging $100 pretty easily, but I like the micros, man. They're a lot of fun. You can size as much as you want or as little as you want. And even with one contract can still do on, let's say, the micro NAS, or even the S&P. You can get a $100 trade on one of those contracts. Obviously, it has to be a pretty big trade. And the zone or the risk reward profile has to make sense. It has to be a pretty big move. But you can do it. You make a couple hundred a month. How much do you think Meet Kevin makes from you too? Oh my God. I don't know. They can look up his Social Blade numbers. Let's see. Meet Kevin. So he gets how many views? 10,000 subscribers in the past 30 days. I feel like that's down. He's probably slowing down a lot. Let's see if I can open up the detailed stats here. Now, these numbers are absolutely BS. Yeah, he's really slowed. I guess because the market's cooled off. His views have gone down a decent amount from where they were, obviously peak, but he's pulling like a week. He's pulling 2.5 million views, maybe a little less, between 1.5 to 2.5 million views a week. So what is that per month? That's a shit ton. Let's just say he averages 2 million views a week. Let's just times that by 4. So 2 million by 4, 8 million views a month. All right. At a CPM, which I think mine is like 20s or I'll just pull it up on my phone and just double check. Not that anyone really necessarily cares, but I'll just do it in the background. So let's see what my CPM, like the cost per ad or whatever that you get paid. Let's see. Revenue for every 1,000 views, RPM. It's 21.86. So every 1,000 views makes my channel $21.86. Let's just say his is similar. Let's call it 20. Let's call it 20. Make it easy. So I don't know how many that is. So you take 8 million and you divide that by 1,000, and then you got 8,000 times $20 per 1,000 views, 160K. So he makes about 160K in ad revenue alone. Now, not to mention the guy sells spots on his private jet for you to come for thousands of dollars to come and ride along with him. Courses out the ass, like it's just pumps the courses. There's always a coupon code. There's no freaking coupon, dude. The guy's just putting coupon, just like relax, so that whatever. So you got all that stuff. He's probably clearing, hundreds of thousands of dollars a month easily, I would think. And especially when you get to that point too, like, you don't want to go down, dare I say, right? This has been a wild ride. Trading thing isn't easy. I'll tell you that it's definitely not. It's definitely not. The COVID market was fun. We ever get that again? Oh my goodness. I think a lot of us are ready to put the freaking pedal down to the floor and break the freaking floor if we see that again. But false sense of reality, I think, but also it's fine. Like there's still opportunities. I think this environment right now, and I think you could, a lot of people that I have seen or talked to from who've been around for a long time, they're all agree that it's not easy. Like, the intraday even is not easy. There's a lot of shit going on that's not, a lot less follow through, a lot choppier action. It's a little more difficult, which is fine. Again, it is what it is. So it just means we have to adapt to that. And if we're getting chopped, then, what do we do? Like, okay, well then that means that there's different strategies that we can utilize to play the chop or play this or play that, right? So it's fine. It's not the end of the world. But yeah, it's definitely not easy. And I think, to be honest, you can make it as hard as you want on yourself too. A lot of this comes down to the mental side, which people will all have varying degrees of what they will say about how important that is. But I think you realize that, to be honest, a lot of your results correlate a lot more to the mental aspect of trading than you realize, than you think. Scalping 0-day SPY all day. Nice. And let's say if that's the it would be fun to do. It will be like a challenge of like I don't do that. I don't really do that enough where I do I should record my screen. That would be fun to do. I've been seeing a lot of people who do that on like shorts, like short videos. I'm like, oh, I don't really watch TikTok. I don't really use TikTok, to be honest, but I'll just look off. My girlfriend will be like, hey, you're showing me a video that I saw on TikTok like 3 days ago on like Instagram or something, or like Reels or whatever. I'm like, oh, I don't know. Sorry, I don't really use TikTok that much. But like TikTok or even YouTube Shorts now, YouTube Shorts is getting a lot more attention, I guess, these days too. It's getting, that's an opportunity, I think. But making those videos where like you're recording yourself live on a trade, right? And obviously a lot of it's boring, but if you're in that, like those are kind of funny. Some of those are funny. A lot of them can be faked very easily, and even the fake ones are funny too. But that could be kind of cool to do. Would do like a challenge of like just trading like, SPY or ES all day. And that's it. Like you have to take like, let's say you had like a challenge where you have to take a minimum of 10 trades, and like, can you be profitable? The scalp challenge. I would sell premium if I played options. I think that's to be honest, when it comes to options, like that is the best way for, I think, a beginner or someone who is new to get into options. Like build an account up, or like you could just have an account where you just do spreads or whatever, but like put some money into an account, pick a couple stocks that you like that are like relatively cheap or whatever, and just sell options every week or every month on those positions. And like, yeah, are you going to be able to do 1,000,000% in a year? No, but can you do 25, 30% potentially in a year? Yeah, you could totally do that. That's not unrealistic. And so that compounded across 10 years is insane, especially with putting more money in and, whatever. Dividends. Can laugh to me today. I sold Sarah at 133. Uh-oh. Hey, it's not. Oh, yeah. I see it. I see what you mean. That popped off the up. Yeah. Hit almost 250. Jeez. Well, that's kind of how I felt about SRZN on that swing when I sold the rest of mine at like 123 and it was popping 140. I'm like, oh man, did I make a mistake? And I ended up being a good sell, I guess, looking back. Market has seen some more time to find its true direction. Similar, it kind of feels like to how it was last CPI. We ended up kind of bouncing around. Here's the last CPI, if I can find it. Yeah, it's right here, this period. So we kind of grinded up and then eventually had a big pull and then ripped back up. So it was kind of wonky, but I remember back then I had a strangle on and the strangle got crushed once this happened. And then, okay, the put's looking decent. The puts got crushed, calls got crushed, and then it was like expired like one of the next couple of days. And I'm like, oh shit. So it got destroyed essentially. That's why I played a straddle again, but I bought an extra month of time. So we're good for now. I got out to March 17th, which is still over a month away. Believe it or not. I'm actually going to be in friggin'... Am I going to be home for that? I'm not going to be home then. No, I don't think I'm going to be home. I'll be skiing. I don't give a shit. I'll be skiing. Hopefully I sell it before then. Also, I've been finding too that to be honest, I think that if I go back through my data or my history, I've found that I've been so much better on the downside. I don't know what it is, if it's just gravity or what, but like when stuff starts kind of trending down and we get those down days, there's just something about those big red days that I just think it's easier. Like it's just easier price action to follow. I just the upside days, like these pullbacks can kind of fake you out so easily and all that stuff. I just think it's a little harder to follow. Let's see. So we got oil. Well, let's check out Nat Gas. How is that looking? How is Natty Gas looking here? Not great. I'm concerned about Nat Gas as this could be a bear flag, but we'll see. Trying to build something, but this is the best, I guess, consolidation that we've been seeing in the past 2 weeks or so. Better price action than what we had, I guess, back through January and early Feb. But it's just kind of consolidating here. I'm concerned that it's setting up for the next leg down. It might not. It's kind of breaking out of this channel here. Maybe it's trying to push up. But we'll see. We'll see. Back under like 250 and it gets a little concerning on Nat Gas. We'll see. Enphase is popping. Did it have that break? Let's try it. Here it is. Here's that 1 hour chart that we're looking at before that looked really good. So check it out. Now it's up into resistance, so it's a little sketch, but over that 218 area was a spot. Now we're above 218. 220 was the target, I would say, if you're going to trade that. But look at that. That looks like a really good, that if there was more time in the day, this is a beautiful potential flag. I think this looks really good for 220 plus. But there is some resistance there, so I got to be careful. But she does look pretty good. New highs on Enphase. I've been finding that like when you start the day off, I've been liking the 5 minute, and then as the time goes on, 15, 30, 1 hour, as the time goes on in the day. If you're still looking around, obviously midday is whatever, midday is midday. But if you're looking later on in the day, looking at the bigger time frames is a little bit easier on the eyes and a little bit less choppy. Socks popper plunge. Yeah, the last 10 minutes. Maybe dumb. Where are we at on this? Yes, look at that. Pop that level, pop the high of the day, essentially, on ES, and then dump. Not like that hard, but it did drop a few points, 5 points, pretty quickly on that move. I got these trend lines. Yeah, let me get rid of some of these lines. Make it a little bit easier on us. How did that Unity do? So it broke that level, then it didn't. Whatever. I guess I could have made a few extra bucks on that, but once it broke, I just stopped out. Made $5 measly on that one. But I've been doing one of the things that I think I've gotten caught up in is, yeah, everyone talking about process over profits and like, sometimes it's BS and who cares. But like, I think in all reality, that's a pretty important saying is process over profits. And one of the things that why I think my win rate was so much better in late last year on any day trades was that I was looking at stuff, and as things broke down against my direction, I would just get out, whether it was for a small loss, even a small win or break even, I would be able to get out, which kept my win rate elevated. Now what I've been doing is I'm like, well, no, I'm going to just play the trade when I put the trade on and plan it out and do that, and just that's it. But what I'm doing is I'm seeing a lower win rate, because sometimes I'll get the move in my direction, but it won't hit my target, and then I'll let it come back all the way, hit my stop loss. Now I'm fine with the stop loss where it is. Like I'm fine with where it is. Risk reward makes sense. So let's say I'm risking 50 to make 100, for example. Like, okay, fine. But like the target, the profit will go up to like $80 instead of 100. I won't take it, and I'll let it go back all the way and then go red 50, cut it off. That was one of the biggest things is recognizing when it's breaking down, when the setup is breaking down. And when it's like, okay, well now it's no longer valid. I'm just going to get it out for a small win or even a small loss and not let it hit my stop and just reset. Like, let's just move on to a different chart. Let's just give it some time, whatever, and reset it. You can always try it again if the setup is still valid. That's one of those things. Like, it's again, like the process of finding the trade, the setup is more important than the numbers, than the dollars, right? Even though I was using the dollars as a guide of like, okay, well, if I keep my risk this way and I have a win rate of this, I'm good. Well, the problem is the win rate. So the process is more important to get that win rate up than the number necessarily. $90 profit. Nice selection. $90. Scaling is so important. 2 riders. Yeah, that's another thing that I think is another factor at play when it comes to the options. I feel like, or even not even futures in general too. If you're scaling nicely, it allows for those say outlier moves, but like you can catch the big move. If you got one contract, an option or futures, it's easy to be like, do I just take this gain? And then you look at it, take the gain, and it'll go so much more in your way, right? Or whatnot. Silver getting a little weak as of late too. Dollars haven't been strong. I'll let the process develop the trades, and the profits will come rolling in. That's the way you got to look at it. So I think whenever you have setbacks or you go through shitty times, right, you got to kind of step back, size down. Who cares? Size down, right? Whatever, and then just okay. Am I doing the right thing? Am I making the right plays? Am I making the right moves here? What am I doing wrong? I look back and I'm like, hey, the trades that I've taken, yeah, I've probably taken too many. Yeah, was I a little bit scatterbrain maybe? So trying to consolidate my list down to just a couple of names, but again, very nice tight spreads, names that I've followed for the past couple of months to years. I know quite well, right? Can gauge relative strength or weakness versus the overall market. Cool, great, awesome. Provides me, even just five stocks, that's fine. Inside those 5 stocks, there'll be some that have nice setups, most, or maybe some that don't. And, you just take the ones that have the best setup for you. But yeah, I mean, that's been the biggest, I think, problem was that I was essentially not focusing on that. And well, yes, if I was like, you could be a robot, but that's why the bots are not necessarily, not all, they got to be really good. And they also they won't work forever because things will change over time. That's why the whole idea of bots, if bots were so profitable, then wouldn't everyone just have a bot, right? So there is a piece to trading that is somewhat, I'm seeing this, I got to change my thesis. Okay, let me change, right? Like there's a piece of that as well. Been doing better with a few stocks than, too many. Yeah, I think that's the way. Because then what you'll find is that you'll jump over here and over there, and you're all over the place. Now, on the flip side, I think when it comes to I've been seeing a lot of setups from a swing perspective in a lot of other stocks that look pretty good and that have panned out pretty well over the past couple months, that I kind of feel like, man, I missed the boat because the intraday action wasn't great. But the big picture, like the 1 hour, the 4 hour, the 1 day, the 1 week timeframes ended up panning out nice. How do you take advantage? Well, that's where I think you can play just shares. And as much as you don't want to hear that, in a swing or a longer term account, like taking 25% of your account and saying, hey, I'm going to allocate this to swinging shares, whether it's inverse ETFs, short side on downside plays, or whether it's, like for example, if Tesla's got a bear flag setting up, or let's say Tesla's like breaking down below a key support on the daily time frames, and we could see a big, or breaking a trend line, an uptrend line, right? There could be a nice couple week move of downside, and you can play like a Tesla, the inverse Tesla ETF, and play that on, just shares, no options, right? And, is it going to make you a ton of money? No, but 5%, or 10% on something like that, while you're risking, 2 to 3 or something like that, let's just say, right? Stack it up over time. It could add to that. It could add to that longer term, portfolio in more of an active way, but also you don't have to sit there and micromanage a position. It's a swing, or it's a bigger picture, look, instead of playing. Obviously, you don't want to be caught in earnings or news. There's always risk of news overnight, but avoiding the earnings is probably the best way to do it. Sweet spot for day trading seems to be 8 stocks or less to keep an eye on. Yeah, I've kind of solidified it down to be honest, it's S&P futures, it's oil futures. That's really it on those things. And even oil, I've just traded a couple times. And then when it comes to stocks, Apple, Tesla, Nvidia, AMD, tight spreads, even Microsoft are like the core. There's a couple other ones that I'll play in there. And then when it comes to what's like the smaller mid caps, Affirm and Upstart will be the other two that I like to look at and play. Generally speaking, like those are the kind of the go-tos. Up, down or upside, doesn't really matter. It's kind of the list that I generally go off of. Sometimes you can have outlier days on like a Meta or, whatever. And the spreads are pretty good there too and stuff. But, you'll probably find, a similar pattern on one of the other names anyway, so it doesn't really matter. We just need to stick with one to a couple things, specialize in that. To be honest, as much as it's been a little bit more challenging as of late, break and retests and flags, that's just, for me, that's where I've just been I've just been much better on that stuff. I've gotten away from a little bit of that, trying other things, but break and retest, flag, momentum, I've been pretty good with that. SKYT going to see a pullback to 1250 range. That's strong though, man. After the earnings, that's on a run right now. It could though. That's a gap fill back down towards like 1250 to 12. It could. The problem is when it's just strong. It's again closing at the high of the day. That's generally a strong sign. So it could keep going in the meantime. But that would be, if you're looking for a pullback zone, this area right here where it gapped up after the earnings looks like would be the spot. $12.50 to $12. Sometimes I'll find a new momentum play from the gap scanner. Yeah, that seems to be, that's kind of like the same idea, right? Like sometimes you look over and say, oh, maybe Microsoft's got news, or I don't know, from an options perspective, I'd say Microsoft got news, or, Firm's got news, or Coinbase has got news, and then there could be something there. But when it comes to small caps, I love the small cap swing strats that we get, that, I tend to run, buying those bottoms, buying those lows, and then holding on to those things for swings. They've been a lot of fun. But okay, finishing the day on SPY, got a little rally into the close there. So finishing up 0.33. So that, to be honest, man, look at this chart. Like here's the daily chart on SPY. Zooming out, zooming in, however you want to view it. It looks pretty good. I mean, looks pretty good. Here's the weekly chart. Let's go to the weekly chart. The weekly just setting up. It's kind of consolidating, coiling up for what looks like it could be the next move. If we get going, I think you're going to see a lot of doubters at 420 if we get there, and then 430 is next on SPY. the next two spots to watch. Beyond that, we'll cross that bridge when we get there, but we'll see. Let me check on Soxal. I have a Soxal covered call at $20. This expiring this week. I honestly, man, I hope we get there. I want to kind of get out of that. It would be nice to kind of free up the $2,000 in the Robinhood and just kind of have $2,000 sitting cash for a bit. It's still making 4% a year, but then I can put that money maybe into some of the dividend plays or whatever. We'll see, or just hold it cash for now. And maybe look at a hedge at some point in the future, but this is good. I mean, this setup looks really good too. This is the 3X ETF on the semiconductor. So SMH is the semiconductor ETF. Soxal is 3X of that. But man, chart looks good. These charts look primed. If I was going to swing, not that I'm really doing that, but if I was going to swing, man, I would be swinging up. I would not be swinging puts based on these closes, based on these charts. Just my take on it. But then again, tomorrow morning we got jobless claims. Like this, there's news that could throw us off for sure. And the other conflicting piece is you got the dollar, DXY strong. It's trying to break over 104. If it gets over 104, that's concerning for, potentially assets prices. And the 10-year, look at this. The 10-year is at 3.8. So 10-year looks like it's making a beeline for 3.9. If it breaks over that, 4% look out. But obviously we got to cross that bridge if and when we get there. So we'll see what the 10-year wants to do. But these things have been strong, which you would think puts pressure on SPY, puts pressure on stocks, but we're not seeing that. And you'd think puts pressure on speculative stocks. Guess what? We're seeing speculative stocks today all green, like everything, all green. They're like all green. So really interesting environment, to say the least. 5 or 10 contracts, fast 20%. Well, that's the thing too. When you're playing like the option side of things, like you got to have obviously there's a lot of ways to lose, right? But when you're playing that side, if you can pull a 40+% win rate, have good risk management, roughly like, a 1.5 to 2 to 1 or better on average, like you're green. That's a green system. But then again, the same thing with the options. Like if you play some of those, yeah, you can be up 5, 10, 20% like this on some of these contracts, whatever on options. But at the same time, like if you're scaling out of contracts, you could be up if it just kind of keeps going some days, and most days it won't happen, but you can get those moves, those outlier moves that could make the week, the month, the year, you know what I mean? If done properly. Again, the probability is lower that you get those moves, but when you get that 50, 100%er on the option, now of course not the whole position, but when you have a couple contracts left and you're scaling out, just like when you're scaling out as like shares of a small cap or whatever, it could skew it. And so if you're dialed in and you're sticking to, let's say, a 20% or a 10% stop, on average on a trade, but you're averaging, 15, 20% plus upside, that win rate has got to be 50% and you're killing it. So nice run to end the day. Looking for that 41.80 at this point. Going along with my funded account at open if I can get confirmation. That looks like, what do I got at this point? Yeah, that high right there. Jump back to this 1 month, or let's go to the 1 hour chart. Yeah, we're getting, this is going to be, tomorrow could be a fun day. This looks pretty, of course, tomorrow I'm going to be, I have an appointment tomorrow morning, but of course tomorrow will be an insane day. Watch tomorrow is going to be nuts. Hopefully the jobs numbers give us something tomorrow as well. Looks bullish, but there's always news. Exactly. That's the thing. That's what's kind of got me to the swings are just not worth it. On the short-term side of things, because it's like, okay, you could be in a setup that looks nice, and then you can swing it short or long, and then you get news overnight, boom, you're gone, you're destroyed. Your contracts are worth nothing the next day. So, all right, with that said, I'm gonna wrap things up. Is this into extreme greed yet? No, right there, just on the cusp of extreme greed, so we're getting up there. Thanks so much for watching. Appreciate you guys like always. It is Wednesday. We'll have a live on Friday for Power Hour. That's the plan. I will see you guys then. Peace out. Enjoy your day. Get outside. It's actually beautiful here. It's 80 degrees here in Austin, Texas. Yesterday, I went for a run. I got sunburned. I could not believe it. But when the sun is out, it's time to get out there. So peace out. I'm going to get outside.